sentiment remains weak as the week is heading to a close. Asian equities are broadly lower following the 121-point fall in the Dow Jones overnight. The Nikkei and Hong Kong HSI opened lower and stayed deep in the red, despite brief recovery on China data. The Nikkei was down nearly 80 points while the HSI was down 140 points overnight. In the currency markets, though, the dollar failed to extend its gain on risk aversion and retreated mildly against other major currencies. Note that the euro-US dollar is being supported by a near-term Fibonacci level. British pound-US dollar holds above the 1.5912 near-term low, and US dollar-Canadian dollar is facing near-term resistance at 1.0019. That is, technical level could turn dollar into consolidations for today. Data from China saw CPI unexpectedly drop to 1.7% year-on-year in October, while PPI rose back to -2.8% year-on-year. Industrial production rose to 9.6% year-on-year in October, beating expectation of 9.5%. Fixed assets investments rose 20.7% year-on-year versus expectation of 20.6%. Retail sales rose 14.5% year-on-year in October versus expectation of 14.3%. Cooler inflation opens the dollar for additional easing from the Chinese authorities. Meanwhile, growth data also suggests that the economy could gather some momentum for a stronger recovery. The People's Bank of China's governor said yesterday that recent economic data showed improvement and people will be more confident about Q4. He also noted that policy next year will remain targeted and flexible, with room for adjustments. In the U.S., now that the election dust is settled, what President Barack Obama would do in his second term to avoid the United States fiscal cliff problem is of the focus. He is scheduled to speak on Friday about the issue. According to a statement from the White House, the president reiterated his commitment to finding bipartisan solutions to reduce our deficit in a balanced way, cut taxes for middle-class families and small businesses, and create jobs. House Speaker John Boehner called for cooperation and stated that he's confident that the Republicans would accept new government revenues as part of a deal to reduce the federal debt. In Europe, it's reported that Eurozone finance ministers would not make a decision on releasing Greece's bailout funds next week. Instead, they'd wait for a final report from the Troika instead. A draft version of the report would be available for Monday's ECOFIN meeting, but that's believed to be insufficient for making the decision. German Finance Minister Schäuble noted yesterday that, "I don't see how we can take the decision already next week." Meanwhile, Greece's parliament will convene again on Sunday for the 2013 budget. And it's believed that November 26th could be the possible date to finally sign off the release of the €31.5 billion tranche's bailout fund to Greece. Swiss National Bank board member Zubrueg said that the central bank is aware that the huge amounts we have under management could impact significantly on market prices. And the SNB takes care to ensure that its investments do not disrupt the markets. He noted that the SNB is constantly assessing ways to improve the diversification of its investments, with active analysis and monitoring on new asset classes and different currencies to reduce risk concentration over time. Nonetheless, the euro is still the SNB's principal investment currency. Meanwhile, he's confident that the policy on the Swiss franc is effective, and we shall continue to pursue it with the utmost determination.